What's going on, everyone? Welcome to the Investing Bros Show. This is going to be a major week coming up in the crypto and traditional finance market. This is Monday morning, and in today's video, I'm going to show you everything you need to be paying attention to this week to determine, does the future look extremely bullish, or is that bigger crash coming? We talked about this a little bit last week, and while I'm seeing some positive signs and want to show you what needs to happen for bulls to return into power, I want to make sure you understand this week is a key decision point on if the markets are going to continue to struggle and go to newer lows on this pullback, or is the bottom in? Is it time to go ahead and enter all of your dry powder? Make sure to stick around all the way until the end of the video so you don't miss a single bit of the information. Make sure to smash the like, hit subscribe, hit the follow button on whatever platform you're watching, either YouTube or X. And we've got to roll our intro. All right, let's get into it. But just before we do, I wanted to bring to you guys' attention that we are getting closer towards the middle of September, and that means the time is running out for you to be a part of this raffle. Now, I know it says Apple Mac Pro Raffle here with our Blofin account, but I want to make sure you understand this is actually a cash giveaway. What needs to happen, though, is you need to sign up with the link down below. Make sure you're registered and start trading with our Blofin account today. If you do that every single time that you trade $10,000 worth of volume, that's keyword volume, over on Blofin, you'll be entered to win up to $8,000 USDT from Blofin. The details are, though, our whole community needs to trade $60 million of volume in the month of September. We're doing pretty good, but I don't think we're on schedule. We need your help. And by the way, guys, you got great odds of winning that 8K if you begin to trade. So go check out that today. Let's check in on some other things here. I told you we're going to look at a lot of different data points this morning as to seeing the positive and where Bitcoin could be, but also being very aware of the potential problems. The first thing I want to make sure you guys understand is that right now, Bitcoin is still sitting in the fear. Not where we were last week necessarily, where we were in extreme fear, but this is still an extremely scared market where retail investors feel a little more bearish than bullish. And the key to this, if you're newer to investing, anyone who's been looking at this chart for a while knows that the further we get into fear, the more we stay on the left side of this chart, the more bullish the markets actually are. Why? Because whales and institutions love buying when retail is scared. It's when this ticker goes over into the green and we start getting greedy, that's when you should start to look for potential levels to get out. So this is the first thing we're looking at this week, that we've now been in fear for a little while. If you were to come down here and look at the monthly chart, or actually let's take a look at the 3-monthly chart, you can see, with the exception of a little bit of time here late in August, we've kind of been staying in the fear and extreme fear mode all the way since back here, kind of back in the beginning of August. This is actually some very, very positive signs that we could be seeing moves to the upside. Stick around because I'm going to show you some charts where we see some bullishness as well. But let's move into the real important position today, or the real important information happening this week. It is going to be jam-packed with a lot of kind of telling tales about what the future will hold, and I'll explain why. What you need to know, though, is that this Wednesday, that's September 11th, of course, we will remember what happened oh so long ago, but we'll never forget what happened in our country. It's going to be also a big day for inflation numbers. As we get core inflation, both year over year, month over month, and the inflation rate month over month over year, it's expected at this time, just so you know, core inflation should really kind of stay exactly where it was, right there around 3.2% for the year over year and around 0.2% for the month over month. Forecast is even saying it might take a small boost up to 0.3, but as a whole, the consensus, the expectation is 0.2 stays in the cards. Inflation rate, on the other hand, last month we came in at 2.9% for the first time since March of 2021. It's expected to drop even lower. Consensus, these are the experts predicting 2.6%. Forecast, meaning what a lot of people think, 2.7. So we're expected to see that inflation number continue to drop. This would be huge. Very, very huge for the markets. The problem is, though, if we miss these boats, could that cause some problems? Meaning if we end up coming in higher, let's say we end up shooting up back over 3%, that could be a problem. And I'll tell you about that here in a little bit because it could cause increased rate cuts. And I'll explain that here in a minute. As we move on, Thursday, September 12th, we will get PPI numbers as well as our weekly initial jobless claims. Between inflation, which is both the inflation numbers and PPI numbers, and job numbers, these are the two major factors that have an effect on what Jerome Powell and the Fed want to do with their interest rate cuts. Speaking of, that's not this week, but you fast forward into next week and you see Wednesday, September 18th. 2 p.m. This is when we will get our Fed rate decision. And then 2:30, Jerome Powell will speak and he will tell us what his plan is, what the future plan looks like and why they chose whatever rate cut they chose. Before I explain this, let's take a quick look at what our expectations are. At the moment, it is sitting in a good position where 75% of our CME predictions are saying only 25 basis points, while 25% are saying 50 basis points. If you move over to poly markets, it's kind of close, but not quite the same. 73% saying 25, 24% saying 50. And then there's a small outlier that is saying we have no change or maybe we even increase. That's just not extremely likely. This CME tool is probably the best thing to keep an eye on. 75-25 split. We should only have 25 basis points. Now let's dive into that really quickly, and then we'll move into the charts and show you what's going on. But why is it so important that we only get 25 basis points and not 50? Why is it important that inflation does not start to go back to the upside and that the job claims stay low? Because at the moment, it's pretty much a guarantee we're going to get rate cuts. We're going to have a pivot for the first time in a long time in the interest rates from the Federal Reserve. The difference, though, is between historical bullish momentum and historical bearish momentum. What do I mean by that? Well, historically, when we pivot with only 25 basis points and there's a perceived soft landing in the economy, that is actually extremely bullish for both the crypto markets and traditional finance. However, when we get aggressive, when we start to go 50 basis points, historically, that's actually a movement based off of fear that the economy is not sitting in a good spot. And that aggressive move of 50 basis points, while it looks to try to tackle the problem quickly, it sparks fear into the economy. It sparks fear into people that things are much worse than we are being told. And historically, that comes with crashes in the markets. Now, we've never seen a heavy pivot in the crypto landscape. There's some that believe that that could be bullish for Bitcoin. There's others believe that Bitcoin would follow the stock market. I think recent history would say as much as Bitcoin should go up to the upside because the dollar having problems would be good for Bitcoin, we have watched Bitcoin and the rest of the crypto space for the most part mimic and follow traditional finance. So we have to assume that if the stock market crashes, more than likely Bitcoin and crypto follow suit. When we go back to those inflation numbers, if inflation numbers are high, this could look like Jerome Powell is in trouble, that the things are still in trouble. If the jobs start to shoot up, jobless claims shoot up, that means the economy is in trouble. It might cause the Fed to actually decide to go a little heavy-handed and go try to prevent an economic crash right as election is coming up. Nobody wants to see that happen. I think that if he were to go and try to dip by 50 basis points, that could kind of confirm a lot of people's fears that a recession either is currently happening or is very, very close. But if those inflation numbers stay low, even if they just stay at 2.9 or go a little bit lower, 2.8, this would still spark a reason to say, you know what, the current route, the current methods that they're using are still effective, and therefore we can cut by only 25 basis points. We don't have to hurry up and cut everything right now. This would spark a lot of confidence in the market. That's the difference right now between 25 and 50. Now, I hope I'm wrong. If we do go cut 50, I hope that the markets do go up. If we go down, it could be a very, very long couple of months before we regain bullish momentum. But at this point, all signs are pointing towards 25 basis points. Inflation continues to stay low. We'll have to, though, watch this week to find out what those details look like. Let's move into the charts and let's take a look at what's happening over there, because there's some other bullish things happening I want you to be aware of. Now, I told you guys on this past, I think, Saturday show that I had some concerns on the charts here. If you were to take a look at, let's say, the 4-hour chart, for example, you will see that we had a buy signal from our Lux Algo indicators right back here on the dip. That buy signal, by the way, is where you get a green reversal, either dot or triangle. In this case, we got a triangle right there. You get green momentum on the oscillator movement itself. That's this gray to green line. It's green when it's bullish. It's gray when it's bearish. And then these clouds right here, the green and red clouds, these are money flow clouds. And you want to see, if you're looking bullishly, a positive flow. So we had the green reversal, green momentum, and positive money flow. This was a buy signal on the 4-hour chart. And I told you guys, I will not be surprised to see Bitcoin, push the wrong button there, come at least back up to its 4-hour smart trail. But the question on if we rejected or if we pushed through really relied upon higher time frames, such as the 12-hour chart, where we're seeing some bullish momentum as far as our oscillators are concerned. Our RSI is getting a nice bounce down here. Our MACD, that's that blue line. If I were to make that full for you guys, that blue line is coming back up above the average movement, that orange line right there. That would be a bullish cross historically. And then over here on the Lux Algo indicator, you have your bullish divergence, you have a green reversal, a green momentum, and the money flow is thinking about turning positive, but it's not there yet. I told you guys I want to see this on the longer time frames, and specifically, I wanted to see it on the daily time frame. But you want to know what's really strange is, as you can see right here, we're not necessarily seeing the positive money flow on the 12-hour chart. It's very rare what I'm about to show you is happening. But the 12-hour chart has not flashed a buy signal here just yet, okay? We need to see the money go positive to get an official buy signal. However, if I go to a larger time frame, I told you on Saturday, I want to get more confident. I want to see a buy signal on the daily chart. And sure enough, that's exactly what we had happen yesterday. Green reversal, bullish momentum, and that money flow has actually been positive now for a little bit. This is now officially a buy signal on the daily chart. Now, we do have a level of resistance, this pink block right here, this breaker block. We have resistance around 57,000, give or take. But the smart trail is actually coming in much above 60,000, closer towards being around above 62,000. Why is this significant? That we're getting a daily buy signal, plus we're seeing a smart trail be back above 60K. Well, this is for the traders out there. I've told you guys before, I'm not long-term bullish again until we break above 65K, but getting above the smart trail here on the daily chart, or getting back to it, is something I think is highly likely for Bitcoin to do. And the reason for that, if I were to show you guys, is let's put this down here for a second. Let's show you only what the Lux Algo indicator looks like. And I marked for you guys the last 10 times we've gotten this buy signal, the reversal dot, a green momentum dot, and a bullish momentum in our money flow. The last 10 times we've done this, only 1 out of those 10 times have we not at least gone back up to the smart trail on the daily chart. Only 1 time have we failed to do it. Almost every other time we at least hit the smart trail, if not breaking above it. So this is why the traders should be looking at this buy signal and saying, all right, I'm not yet certain if the long-term effect is bullish, but I'm at least bullish to go see a run-up back to our daily smart trail. Let's take a look at the one time way back here in the bear market, May of 2022. You guys can see right here as I zoom in, we get a buy signal down here. Oh, actually got to go up here for a second. We get a buy signal back here on a dip during the bear market, but you can see while we got close to the smart trail, we failed to touch it. This is a failure to actually hit our trading strategy. But every other time, even back in January of 2022, we get this buy signal, we hit the smart trail. These other times, buy signal, smart trail, buy signal, smart trail. Some of these times, we even end up breaking above it, like this one right here, January 2023. We end up blasting above that smart trail and going into the reversal cloud. Either way you cut it, like I said, if you only looked at the last 10 opportunities that this signal flashed, you have a 90% chance of at least coming back up into and testing the smart trail on the daily chart. Ladies and gentlemen, that smart trail is coming in above 62,000. So right now, between the data points we see happening, between the charts and the information we have going on, there's a lot of reasons to be optimistic about this week for Bitcoin, and therefore the altcoins trailing right behind. With that said, though, we do need to continue to watch what those data points print. because I do think those are going to have major impact, not only on can we get back to 62,000, but even more so, will we see rate cuts, the right rate cuts, and will we see the Bitcoin bull market and crypto bull market continue to the upside, setting new highs in the next couple of weeks? Make sure to stick around and watch every single daily show we have. We go live every day at 3 p.m. Eastern Standard Time, where we keep you updated on everything happening day in and day out so that you can make the right investing decisions for yourself. Make sure to smash the like button and hit subscribe if this video was helpful. I'll see you in the next one, though. Adios.